But looking at your screen, starting on the upper left, we have Rich Delgado. He's the managing director at DLP Capital. Moving over to the upper right, we have Leif Dahleen. He is the mind behind the Physician on Fire.
Good evening, everyone.
You can see me here in the lower left. My name is Jim Dolly. I'm the founder of the White Coat Investor. And on the lower right is our guest of honor this evening. We're super excited to have Don Wenner here. He is the CEO of DLP Capital, and he's going to be talking about a few things tonight. He's going to be talking about their Prosperity Program, which is a sweet value add when you are an investor in their funds. Leif actually recently attended one of their events and is going to tell us a little bit about that as part of the presentation tonight. They're also launching a couple of new investing funds this next week. Now, I'm already invested in a couple of their funds, and so I'll be looking at these other ones as well. But I'm excited to learn more about those and hear more about them as well. So what we're going to do here is I'm going to turn the time over to Don, and we're going to take the rest of our mugs off this screen and allow him to share his screen so you can actually look at some slides while we're doing the presentation. So go ahead and you can share your screen now, Don, and I will pull the rest of us off here.
Sounds great, Jim. Well, I appreciate it, everybody, very much for your time this evening or whenever you're watching. As Jim said, my name is Don Wenner, and I am the CEO at DLP Capital. I apologize for my background. I am in my pool house here right now, as I have two young boys who are 8 and 9 and two dogs running around the house, and didn't want you to hear any of that. So apologize for the background here but I am in beautiful St. Augustine, Florida, so it's not so bad here behind me out by the pool. But with that said, I'm going to dig in here to a topic that kind of ties into my notes here on my family, which is our membership that Jim alluded to, called our Prosperity, Family, Wealth, and Legacy membership, that we want to make sure was fully known by the White Coat investor community. So I'm going to give you a little bit of overview of what it is, where it came from, and a couple of the events we have coming up, and some of the features that you might find interesting as a part of the membership for all White Coat investors here. So with that said, I'm going to dig in. Please ask questions throughout, and Jim and possibly Rich will ask those questions, and we'll address them throughout the presentation. So with that said, here's what I like to call my Barry disclaimer. Barry's our chief legal counsel, and this is a little disclaimer we've all seen many a times. All right, so I want to dig in here. So we call our Prosperity membership for short. The full name is the Prosperity, Family, Wealth, and Legacy membership. And I'm going to start off with explaining, what it is, where it came from, and why did we start it. And this little slide here, and probably most of you, if you do know who we are, you probably know us from our investment vehicles that we have talked about here on White Coat many times. Hopefully a number of you, I know many White Coat investors in the hundreds now, thanks to Jim and team, are investors with us. And most know us for, as the name says, DLP Capital, for our investment vehicles, our investment funds, which we are launching 2 brand new funds next week, which is a rare event since we only launch a new fund every couple of years typically. So we'll talk about that. You guys are going to hear it really first here, as we haven't even made any real news about it until next week at our event. But this on the screen is what we call our flywheel. And this is, although we run, a family of businesses, companies that work together, and we do a lot of different things, from real estate brokerage to property management to construction to development to our investment funds to lending to title to loan servicing. We do a lot of different things. At the end of the day, our business here at DLP is actually pretty straightforward in terms of what drives everything we do. And at DLP, it all starts with capital gets invested with us into our funds. And we focus on not just managing that capital, but building legacies, families, and wealth for our investor base, which we often consider our largely faith-centered wealth. And the Prosperity membership is a way for us to help drive more value to those families invested with us, as you'll hear about over the next few minutes. Once that capital comes into our funds, whether that's the DLP Lending Fund or the DLP Housing Fund or Positive Note Funds or any of our offerings, even though you can invest with us in a number of different ways, different return and investment structures, at the end of the day, what we're doing is pretty simple. we invest in housing. That's what we do. We do so as a lender, we do so as an owner, we do so as an equity partner. We invest in ground up new construction, we invest in largely value add existing assets, but it's all housing. And not only is it all housing, it's largely workforce housing that is affordable for the local workforce. And then once we invest that money in housing, what we're focused on doing is scaling companies through elite execution, or in simple terms, we're building elite organizations, which is the title of the book that I wrote last year and launched early this year, which is we help companies, including our companies at DLP, to scale profitably and consistently through disciplined execution. So not only do we run this very disciplined approach to how we grow our companies, we actually teach our operating system to the real estate operators that we lend money to. And those real estate operators that we're lending to and we're investing equity with are actually at our events, including the events I'm going to talk about that you could come join us at if you so chose, coming up here later this year. And then if we do that well, if we execute well, we create prosperity for the residents, the 35,000 residents that live in our properties, for our 450 team members at DLP, our 2,000 investors. I should say almost 2,000 investors. We'll break 2,000 within the next week or so, I think, Rich. And with the operators who borrow from us and who we help scale. And that operating system, or that flywheel of everything that we do at DLP, is where the Prosperity membership fits in. And as it says here on the slide, we're focused on investing in communities and helping people achieve a lasting legacy and happiness through living fully, and in turn achieving significance, making an impact, and having a deep relationship with our Creator. That's a kind of overview to the goals of the Prosperity membership. I'm going to explain that in a little simpler terms here in a moment. So our Prosperity membership is a part of our goal at DLP to make an impact on 4 major significant crises that we face in America and frankly around the world. First is the affordability crisis of workforce housing. 2 is the jobs crisis of the American workforce. 3rd is the legacy crisis, which is directly what the Prosperity membership focuses on. And 4th is the happiness crisis. The affordable housing crisis is a pretty big one. It's probably one that most of you are at least semi-familiar with, but I don't think most people realize how significant of an issue this is. And I don't think most people realize how rapidly this crisis is growing. We've had the greatest growth in the average rent in America in the past year ever, which sounds like a good thing to investors, which it is, but for the average working family, it's certainly not a good thing. Around 12 million Americans are spending more than a quarter of their income on rent, meaning more than 30% of their income on rent, meaning they're cost burdened, meaning that they're struggling just to make ends meet between education, food, transportation, and just their basic living expenses. They're struggling to make ends meet when more than 30% of your income is going to rent. So roughly a quarter of Americans spend more than 30% of their income on rent. More than a quarter of Americans are spending more than half of their income on rent, and more than half of Americans are spending more than 30% of their income on rent, which is the definition that most accept for cost burden. So more than half of Americans are spending more than they can really afford to on rent, with a quarter of Americans spending half of their income on rent, which you can't even afford the basics of food and healthcare when that much of your income is going towards rent. The average rent in America, depending on where you're at, has gone up 12 to 20% in the past year. In the past decade, the average cost of housing has gone up over 75%, while the average income for most working Americans have only gone up 5 to 8%. So it's a major crisis that's getting worse, frankly, by the day. And that's what we focus on, investing in housing that is affordable for the local workforce, for the people who work there. The second big crisis we're focused on is the jobs crisis. We all hear about automation and jobs that are being replaced by AI, by computer, by technologies. Somewhere between 20 to 40% of American jobs that people are doing today will be gone in the next 10 to 20 years. That's not a big, scary thing that I think we have to be worried about in terms of there won't be any jobs, that there will be new jobs that will be created, but those jobs will be created by entrepreneurial small businesses. I believe that's the real driver of the economy, and that's going to be the key to being able to repurpose people from their current jobs into new companies, new opportunities, new ways to operate as there's innovation and technology. And that's what we focus on, helping the real estate operators we invest with, is building companies, hiring people, growing companies that not only create jobs, but also create affordable housing for local workforces. The third crisis we're focused on is one probably a lot of you have heard about before, the shirt sleeves to shirt sleeves in 3 generations. The fact that most first generation wealth creators will have their wealth lost, if not by the second generation, by the third generation. And we believe it doesn't have to be that way, and that there's some significant ways to avoid or dramatically reduce the probability of that happening. And it starts with education. And that's what our events are one of the big components our events are about. And the fourth crisis is the happiness crisis. And it's probably not surprising to many to hear the stats that right now we have the highest level of unhappiness in American history. COVID has certainly contributed to this. We have somewhere around 40% of Americans struggling with some form of mental illness, the largest being depression. And that's what we're focused on making an impact on in the happiness crisis. And a number of unique ways we're doing that, starting with helping people gain connection, which is what most people are in search of, and what's the number one driver of the lack of happiness, the lack of genuine connection. So we could spend all day talking about these crises, but these 4 crises are what we're really focused on, what all of DLP is focused on, and what the Prosperity membership was born out of. So a little bit about what is included as being a Prosperity member, and it starts with coming to one of our events that I'm going to talk about in a moment. But we focus on helping you discover the keys to ensuring your wealth and legacy will carry on for generations, avoiding that shirt sleeves to shirt sleeves in 3 generations. We focus on 3 main components of the Prosperity program. We call our Prosperity Plan, which is family, wealth, and legacy. On the wealth or financial side, there's a few key components to it, including using a tool we call a personal financial statement. We do it a little bit different than maybe how you've done these before, including helping you establish future state visions, and we call freedom numbers. We help you chart kind of the checkpoints to achieving your financial freedom numbers. We help you do things like risk assessments and evaluate how to better protect your assets, including bringing in trusted advisors in tax and law and so forth. We help you shelter your income and assets from tax and liability. We help you gain feedback and insights and perspectives from peers through what we call a building a legacy presentation and peer review. We do education around asset allocation. So a lot of things to help you not only maximize your investments, but to protect them and also figure out what you want to do with your assets. Why do you have them? What do you want to accomplish with them within your family, within your philanthropic interests, how to make the best impact on your time on earth and afterwards as well. But the financial side is really the foundation. It's really the surface of what a lot of people think of, again, when they think of DLP Capital and when they first come to our events. But that's really just where it starts, and frankly, not where I think most people gain the most value. And speak a little bit about the value that people gain. I'm going to have one of our great members, Andy Reid, play a little clip from a Prosperity membership call we just did a couple weeks ago, and hear a little bit about directly from Andy. He's a pretty amazing guy. So I'm going to go ahead and play this quick video. Andy, take us away.
Great. Because there's so many new members, I thought maybe I'd take one step back before this. And,
please.
Before giving the presentation. I was sent a little sheet called the Life Assessment by Don or Rich before I think I even signed up and joined as a Prosperity member. And it was a really interesting exercise, to be honest with you. I was coming off of my most successful year in our business in 2020, and I get this sheet and I go through it really excited because I knew I was going to kill it, right? I knew it was going to be great because of the great year I'd had. And I walked away from that experience realizing something I wasn't willing to admit to anyone, even to myself, and that's that I was miserable inside, honestly. And I thought, well, I shouldn't be because of X. I shouldn't be because I reached, this financial goal or this business goal. And it really opened my eyes that I was a person that lacked balance in my life. And it was really, really profound. Because, I have a Christian background. I have a support church. I have a great family. I have all these things that say I should be blissfully happy. And I came to realize that I was hyper focusing on one aspect of my life to the detriment of everything else. And so that was a kind of a jumping board to this process of maybe self-discovery. And then through the Building a Legacy presentation, it didn't become a process of self-discovery. After the presentation, it became the information to start really using the other tools at DLP, the personal compass, the family compass, some of these other tools. It poured gasoline on my ability to use those other items. And that's why I would recommend to anyone listening if you haven't done a life assessment, man, go do it. But even if you have or haven't, sign up and take advantage of being a presenter, because it helps you with all the other things that DLP is going to give you in terms of goal setting, in terms of learning to connect in a more deep, meaningful way with the people around you.
A little short testimonial from Andy, who is a phenomenal guy. So it starts on the financial side, then second big component, which is really where my biggest passion in these events and the contents around is legacy. I like to say we help people live and leave a legacy. And we built some pretty awesome tools to help people do that and better think about, again, the impact they want to make here on this earth and after. So we built a really cool tool called a life assessment, goal setting. We help you evaluate life across the 8 F's of life, which are family, faith, freedom, fun, fulfillment, fitness, finance, and friends. We help you establish an impact and philanthropy plan, which are connected but very different. Trust and estate planning. We help you answer some pretty tough questions, legacy questions. Before I die, what I want to do, how I want to measure my life type of questions. We've built a really amazing tool we call Personal Compass, and helping you really assess and lay out the direction for yourself, what you want to accomplish, establish rocks to biggest priorities for the next 90 days in your life. We have a really amazing tool we develop, and it's been on many bestseller lists this past year on Amazon and so forth. We've developed called an Elite Journal, which we provide to all of our members, which helps you get into the habit of journaling, which if you've never done it is pretty amazing. And then the third component is family. And our family prosperity roadmap includes a tool we call a family compass, which I think at the last event that Leaf was at was probably the biggest hit of the event, at least in terms of the content. Some of the speakers and entertainment we had may have been even more cool than the family compass, but in terms of some of the real value and takeaways that people had, it's a phenomenal tool, something my family and I have been using for years. And we help you establish the rhythm of family meetings, family governance, succession planning. So a lot of incredible education, not just from us, but from great speakers, from fellow peers who are part of the group. We have 110 prosperity members. We only launched this at the beginning of the year, and we already have 110 members. And there's not a bad apple in the group. They're all incredibly successful, interesting, giving people, which is probably the best part of the membership. Part of the membership is these 3 conferences that we do annually. The one that Leaf will talk about, it was in July in beautiful Asheville, North Carolina. Coming up here in a few weeks, 2 months from now, we have one here in Ponte Vedra Beach, which is just north of where I'm talking to you from in St. Augustine, where that focus will be on wealth. Then in March, we'll be in St. Simons Island, Georgia, with an overall focus on legacy. We also do live membership calls every month in between these conferences, helping us keep on track with making progress on our family, on our wealth, on our legacy. We help introduce you to great trusted advisors who will provide you with free one-on-one calls. We do review meetings with our success managers, and many of you who are investors already are working with Larry or Rich or Mike or Brad. They'll help you provide resources, tools, connect you with other other peers, et cetera, and helping you on your journey of prosperity. And part of that is kind of already alluded to, is this great network of learning, of peer feedback, of a lot of tools that we've developed. Also, as a member, you get first access to all of our newest and sometimes exclusive investment offerings that we don't offer out to our larger investor base, such as the bank that we're buying in a few months, which I'll actually touch on briefly here in a minute. Access to our trusted advisors, and really cool part of all this, and you guys can all rest at ease who've been listening. There's no sales pitch here. There's no cost as a white coat investor and a Physicians on Fire member. We actually provide the Prosperity membership to you at no cost as a perk of being part of these great communities and coming and being part of the DLP community. So there's no cost to you for being a member, for coming to our events, getting access to all these resources I've been touching on here relatively briefly over the last 15 or so minutes. One of those ones that maybe get people most excited right out of the gates, those who've gotten used to our investment vehicles and the return we generate, is exclusive / first access to our investment opportunities. The really cool one we're excited on right now is the bank acquisition. Some of you may have heard about this already, but we are in process of buying a bank, a Florida-based bank, and we'll be closing, knock on wood, right here at the end of the year. And we've literally only presented this bank opportunity out to our Prosperity members. It's the only base who we've made this opportunity available to. So literally around 200 individuals have we presented this to, have we've invited to sign an NDA and learn about this opportunity. Many of which have invested. We've actually already raised all the capital we targeted here, but we've decided we're going to accept capital for at least a couple more weeks. So if this grabs your attention, if partnering with us and owning a bank is something of interest to you, we'd love to chat with you on that. We'll have you sign an NDA, and we can send you a recorded webinar we did about 2 weeks ago, giving you all the overview, send you the investment docs and so forth. And we'll be touching on it at our November event as well. The progress there is hopefully by then we'll have, or just be about to have, our final regulatory approval. So again, much more to talk about. I could spend the whole time here just talking about this, but it's a phenomenal investment that we've been working on for a few years now. So you can reach out after this. We'll give a couple ways to get in touch with us, but if you're already talking with any of our ISMs, you can reach out to them directly, Larry or Rich or anybody on our team. We have 50 White Coat and Physician on Fire members already a part of our Prosperity membership, including Jim, including Brett, including Leaf, who's going to touch on his experience at our last event here in a moment. So welcome to come join us and be a part of our phenomenal network. And to tell it even better than I can, I'm going to invite Leaf to talk a little bit about his experience joining us in July. And I'm going to stop. Can we see you here now as well? Yes,
there I am. Yeah. Thanks, Don. Okay. That's a picture of me and my family. So back in, I guess, must have been May or June, Rich, who was on the call with us, reached out to me and asked me to share this opportunity, this Prosperity membership, with my readership. And I said, okay, I can do that. And he said, you can join the membership as well. And I learned more about it. And I said, well, okay, if I'm going to share this with my audience, I want to know firsthand what it's really like before I put too much effort into this. And on a somewhat of a whim, I told my wife about the conference, and I said, I think I'm going to try to go down there. It's in a couple weeks, and I could drive. And I told her who was speaking, which we had Hal Elrod from the Miracle Morning, Eric Maddox, who helped find Saddam Hussein through his interrogations in Iraq, and author Brad Stulberg, who has written several books talking about mental health, groundedness, peak performance. Some really, really engaging speakers. And then I looked at the itinerary for the rest of the weekend, and there was a lot of fun stuff packed in. A tour of Biltmore, which we missed on our last trip to Asheville. A brewery tour, which I'm always down for. And so we just decided to go. We showed up in Asheville on a Thursday, had lunch at noon, and I think DLP kept us entertained, engaged. There were workshops, and it was pretty much go until Sunday at about noon, when we started heading back north, heading home. But I got a lot out of it, much more than I was expecting. Met some really interesting people. As Don said, you've got 200 or so people that are part of this right now. I imagine that will grow, and people from a lot of different walks of life. You've got the operators there who are borrowing money from DLP, quite a few investors there, some potential investors, and some people that have done extremely well in their respective fields. And so I was, came back from that and wholeheartedly recommended it to my readership. And just today I wrote a blog post describing my perspective on, what I think the membership is about, what the weekend was like for me, and the fact that I guess I said that I would probably be going, but I just booked flights today, so I definitely will be joining Rich and Don and a bunch of Prosperity members there in Ponte Vedra Beach in November. I believe it's the 11th to 14th. So I hope to see more of you there. There were a few positions on fire, a few white coat investors as well at the last event, and we would love to see more. So that's what I've got.
Awesome. Well, that was
a link to, by the way, in the Facebook chat to that blog post that I wrote. And you're welcome to ask more questions of me or of Don and Rich in the comments there too.
Awesome. Thank you, Leif. That was phenomenal. Should have just had you started off. I mean, you did a great job. So thank you. All right, so just last couple updates. I'm not going to try to play this video, but we'll circulate these out due to the technical issue. I'm not going to play it, but this is one of our great long-term investors, Andy, and some of our other investors from Asheville talking about their experience at the event.
To network with other high-minded, big-thinking people who really care about long-term success and building a generational success.
We typically will plan before we come things that we're struggling with and where we just want to get better. We utilize the resources that DLP has to really help grow our business.
I was impressed with just the world-class level of speakers that we have. They're experienced, they've written books, they're passionate about what they believe. I got a front row seat to hear things that are very relevant to my own personal life. I've been focused on that. I'm going to go back, and things are going to be different when I return.
So we have been talking about this event in November. I will mention just very briefly, by the time you watch this, it may be too late. If you're watching this live, we do have a kind of smaller version of our events next week at our headquarters in St. Augustine, Florida. So if you happen to be local or come into Florida or say, hey, I'd love to get down to Florida, or you just have a free day to come spend with us, we'd love for you to come join us. Certainly live in St. Augustine. But then the other interesting thing that whether you could join us live or not, we welcome you to come join us, is that we're going to be hosting a dinner event that will be live streaming that you can hear about our 2 new investment funds that we're launching. And if you are saying, maybe I can make it, we are spending October 1st. So the 30th is the event, and then the 1st is a day of golf and fun, and there's some incredible golf in St. Augustine, and it's a beautiful, glorious place. That background is actually where we'll be doing the dinner event, which is the Casa Monica in downtown St. Augustine. If you've ever been there, we have a great speaker, a gentleman by the name of J.J. Bearden, who was a wide receiver in the NFL and just a phenomenal speaker that evening. So again, I know it's very short notice yet, but if you can join us, we'd love to have you. But at minimum, come join us on our virtual presentation. Which that link is right here. Rich will drop it in, or somebody will drop it in here. So you can click that link, but dlpcapitalpartners.com/capital dinner. So you can join this virtually at 5:30 p.m. Eastern next Thursday. And we'll be launching 2 new investment funds. And I don't have all the details here in this deck, because that's not what this presentation was about here today, but I'll just highlight that the Building Communities Fund is a equity fund that will own ground up, brand new apartment communities, and has a 13% return target annually net to investors with great tax shelters. And then the DLP Preferred Credit Fund is a lending fund similar to our existing DLP lending fund, but slightly higher returns and a slightly different investment profile. So both of those will be fully launched next week, and they'll also be up on our website, and we'll get them posted on white coat and so forth as well. And maybe next time we come talk, we'll talk specifically on those investment offerings. But welcome you to come join us next Thursday evening, if you'd like, for a webinar where I'll be launching those funds live from the St. Augustine event we're hosting that evening. So welcome to join us. And then the bigger opportunity here related to the Prosperity membership is, as Leif said, November 11th to the 14th in Ponte Vedra Beach. You're saying, where is Ponte Vedra Beach? It's right next to Jacksonville in Northeast Florida, at the Sawgrass Marriott Golf Resort. You may have heard of Sawgrass before. And we have some great speakers. Leif mentioned some of the ones at our last event. This event is not going to disappoint. Some of the names you see there, Dr. David Sinclair, if you just type him in, he wrote a great book called Lifespan. He is the thought leader on longevity, on reversing aging, world-renowned Harvard professor, leading a lot of interesting studies and science on longevity and health. He'll be our keynote speaker Friday night. Scott Bornstein is going to be talking about memory and actually improving your memory and reversing the loss of memory and reversing some of the major issues many face as they get older. Oz Perlman, who I'm surprised Leif didn't talk about because he may have been the highlight of our last event. He's a mentalist. He was a finalist on America's Got Talent, and just he blew everybody out mind at our last event. We had to bring him back again. This is just a few of the people. We have Lloyd Reeves, who, if any of you ever gone through Halftime Institute, Lloyd runs Halftime Institute, which is a great organization that's helped hundreds of thousands of people go from success to significance, as they call it. He'll be one of our speakers. We have many great speakers, including we'll be doing a lot of workshop activities, a lot of education from our DLP leaders, including myself, lots of fun from golf to trolley tours to excursions. It's going to be a really fun few days. You're going to learn a lot. You're going to walk away with a lot of value, I assure you. So you can go to register for that, dlpcapitalpartners.com/Florida. And then all these different links, really, if you just go to dlpcapitalpartners.com and you click the button at the top, this is events, you'll see all three of these things that I've just gone over, but we'll drop and share those links out. And then this is the first, I am actually seeing this slide, so you're learning this with me here right now. So the first 10 guests from White Coat or Physicians on Fire that sign up by Friday and get their hotel booked will meet and greet with one of our guest speakers. So we're going to set you up with one of those great speakers for some one-on-one time. So an extra little perk as we've been able to negotiate with some of those speakers to give that some one-on-one time with just a select number of our investors. I know many are going to want to meet with David Sinclair. So please get registered here. And we are actually having a membership call in 2 days at 6 o'clock. And we'll be training on a couple cool tools, including our personal financial statement. So if you're already a member or thinking about becoming one, could be a great way to come join us on a Zoom call in 2 days and get a little feel of our group and the type of training we do and teaching and education we provide. So I know it's a lot of different opportunities I threw out there. But again, you can see them all on our website. We'd love to follow up and talk to you about it more individually. And then speaking of events, at the February White Coat Investor Conference, we are one of 2 platinum sponsors. We're very proud to have the honor of being one of the 2 platinum sponsors. And I will be at the event giving a keynote speech on the new American Dream, which I've been working hard on and can't wait to present at your conference in February. And we'll be doing a lunch event on our funds as well as the Prosperity membership, hosting a sponsored dinner event. So you can, of course, register there now. And 1,000+ attendees will be there, selling out quickly. So I'm doing Jim's job a little here on selling the White Coat conference here, which I can't wait to come and be a part of myself. So Jim, anything you want to add there before we open it up here to any questions?
Sure. I can talk a little bit about the conference. Registration just opened last week. We've already got at least 300 people for the in-person event. And then, of course, most of the virtual registrations will probably happen just before the deadline to get the swag bag, which is December 1st. But we're expecting to have hundreds of people in person, as well as, I assume, probably about as many people as we had last March for our virtual conference last March, which was over 1,000 people. So it should be a really great event. It's in sunny Phoenix. For those of you who are sick of not being able to travel, here is an event where everybody going is vaccinated. And so it might be the safest event you can attend all year. But it should be really good. We're looking forward to having a lot of wonderful speakers and sponsors coming to the event. But there's a big focus on wellness, which everybody needs, given all of the, battle fatigue we've got from COVID. And of course, there's going to be a whole lot of financial literacy training as well. So it should be a really good event.
Excellent. All right. So that's everything I have here for this evening. Open it up to any questions.
Okay, I'm going to bring everybody back up here so that we can answer some of these questions and banter about whatever we want here. But we did get a few questions on Facebook, so let's go over a few of those. I think probably the first one is the most general one, Don, and this is probably for you. They basically want to hear a discussion of your various funds and how the returns on those funds are taxed, particularly whether depreciation is passed through to the investor.
Sure. So I'm going to, because as of today, we have 4 investment offerings, and as of next week, we're going to have 5, including 2 new ones where you guys aren't going to convince me to share the information I'm saving for next Thursday night tonight. So I'm not going to get into that fully, but I'll give highlights. So after, I'm going to speak as if it's a week from today. We will have 5 investment offerings, 2 that own real estate and 3 that make loans against real estate. So the 2 that own real estate, you get all the benefits of depreciation. And historically, we've been able to offset all of the distributions with depreciation across all of our historical equity investment funds, and expect to be able to continue to do that. So in short, on the equity side, we're generating 12+% returns that are sheltered from tax through depreciation, as well as through unlimited qualified business income deductions and some other really interesting tax benefits, such as we're able to do 1031 exchanges within inside of our fund. So very tax advantageous, 12% plus returns is the equity side of our business, owning the real estate. And the other side is where we lend money to other real estate investors. Those funds do not have the benefit of depreciation. They are generating double-digit returns with monthly distributions, but they do get the benefit of qualified business income deduction, which is you're taxed at a 20% lower tax bracket than normal ordinary income.
You can also place those these debt funds, such as the lending fund, into a self-directed 401k if you have access to that, or a self-directed IRA. That's where I hold that fund in my portfolio, so that basically it's 100% tax-free that way. It's the ideal holding for a tax-protected account because it's a high return and it's a very tax-inefficient return. I mean, you do get the QBI deduction, at least for a while longer. Congress is talking about changing that one or limiting it maybe with this tax bill that's in Congress right now. But for the most part, compared to the equity funds, it's much less tax efficient. So if you got to choose one to put in a tax protected account, it's the lending fund you want to put in there, and you'd want to put the housing fund or one of the other equity funds into a taxable situation. Do you want to talk about the notes fund as well? Is that one going away, or is that one still going to be available?
Yep, still available. So, yep, so our note offering fund is one of our soon-to-be 3 lending funds today. Today, one of 3. It'll remain one of 3 lending funds. So DLP Positive Note Fund is a fund where you're actually lending money to the fund instead of having an LP or a partnership interest, and getting a fixed return on your investment, option of taking distributions every month or letting it compound and grow. And just like our other lending funds, it gets the benefit of qualified business income deduction, but you are being taxed at ordinary income minus a 20% deduction.
Awesome. And for those of you who have questions here, or those of you who've come in late, what we have on the screen here is we have Rich Delgado at the top. He's the managing director at DLP. We have Leif Dahleen, the physician on fire, in the upper right. We have me in the lower left. I'm Jim Dolly, the founder of the White Coat Investor. And we have Don Wenner, the CEO of DLP, talking to us here and answering questions about his funds, as well as this prosperity membership that he was talking about tonight that's basically free to all the investors in the funds, and a wonderful opportunity for both white coat investors and physicians on fire. Our next question is about risk of loss of capital. This is from somebody who says, I'm already an investor in the DLP Housing Fund, so the equity fund that has been around for a while. Can you speak to the risk of loss of capital and what is realistic versus a worst case scenario?
Sure. So per the, as I called it, for those who were on at the beginning, the Barry slide, the disclaimer that, all investments have risk, I'll start there. But what we own in the DLP Housing Fund specifically, and all of our investments at the end of the day are underlined by workforce housing. And that next Thursday when we launch these two new investment vehicles, one of the other things we're doing is we're actually mandating on ourselves that at least 85% of all of our investments are in workforce housing that is affordable and will remain affordable to the local workforce. So that's a big deal. And it's a big deal to your question about risk because let's just say, for argument's sake, let's talk doomsday. Let's say 2008 happens, which there's so many things fundamentally about today's market that's very different than 2008, starting with that today we have the greatest undersupply of housing in American history. But let's just say property values went down by 20, 30, 40%, right? Some crazy decline in property values tomorrow. What will not, we don't believe will go down are rents. So rents have gone up year over year, every year through 2008. In certain pockets, rent stayed flat in 2008, 2009, 2010. Most markets, they actually still grew modestly. So the reality is when you're in a recessionary environment, $800, $900, $1,000 a month apartments are in more demand, not less. So the cash flow, our ability to generate cash flow and pay distributions to investors, we believe will remain very, very strong even in a recessionary market. And because our funds are evergreen, meaning they're open-ended, we expect we're going to run them for decades from now, not just years. If we were in a recessionary environment where property values were low, and those periods of time generally only last a short period of time, 12 to 18 months before things start to recover, we won't sell assets, right? We're not in a position to need to sell assets when property values are low, especially considering we're generating great cash flow. And even through COVID, which we just experienced with the moratoriums and the inability to force eviction, we had our cash flow grow every quarter across our portfolio because the demand and rents continue to climb even in some environments of 20% unemployment and so forth that we experience. So we feel very, very confident in our ability to continue to generate great cash flow to investors, even if we're in some form of recessionary environments. And then the lending side of our business, one of the cool things that I think is important to mention, the two main things people worry about in a lending fund or in real estate in general is what if interest rates go up? Well, if interest rates go up and you're in a lending fund that's making short-term loans, in theory, our rates will go up, which is actually a benefit to you. So we're actually a hedge against interest rates actually going up, not expecting them to go up, but if they did, it would actually help us. And then if, again, we had a recession environment where property values drop by a whole lot, our average loan to value is 54%. So we have low loan to value. We have very little, we like to call real estate risk. Our loans are 6 to 12 months generally. And what we lend on is investors buying distressed real estate, value add real estate. So guess what happens when there's distress? There's more opportunity to buy. There's more opportunity for us to lend at even lower LTVs to the best borrowers at better returns. So we, back when COVID first happened, we were excited from a business standpoint for volatility, for opportunity, for property values to decline because we knew it was going to create investment opportunities, not, frankly, challenges. So we can dig a lot more into that, but there's some high-level comments around risk.
Yeah. And unfortunately, all those opportunities in March of 2020 didn't last long. That was a very rapid recovery. Okay. This question might be best for Rich. At this time in the market, what is the average time we can expect to wait before our money is deployed and starts earning interest in the lending fund?
Yeah, so generally we like to quote, 30 to 60 days in terms of average deployment time, just to hedge our bet. But quite honestly, our pipeline has been extremely robust, both on the housing acquisition side, and I'll let Don, I won't steal his thunder, talk a little bit about a huge acquisition which we just closed. And so your money, Jim, got deployed along with that investment. And then on the lending fund side, we are currently running under 30 days just because of the robust pipeline that we have. However, again, we always tell investors, just expect it to be 30 to 60 days. You'll be happy when it comes in at 21 or some other number. But again, the best thing is once you're in the fund, which is why we take the time to really make sure that we're making good investments, right? That's the last thing we want to do is impact investors with a negative return or putting money to work too fast. So one, we want to make sure all of our investments are going to meet our return hurdles. And again, we don't rush to deploy capital. But at the end, we do put money to work. And once you're in the fund, you're going to enjoy those beautiful returns.
Okay, the next question I've got here is actually more of a complaint. This is from an investor who's made a few phone calls and left a couple messages for Larry and is wondering why nobody's calling him back, wants to know if you're having IT issues. Maybe I ought to have him get in touch directly with you, Rich. And
yeah, I'm going to give my information now. So I apologize. I couldn't find a way to drop comments in, but my number in the office so everyone can hear it and take it down is 904-344-8080, and you can contact me directly. And my email is very simple, rich@dlpre.com. So again, if you ever have trouble trying to get through our main number, and again, we apologize. I know we've been getting crushed with more capital coming in and phone and calls coming in. And I know there was a discussion there on Larry. Larry himself is enjoying some very much needed time off on his 10-year anniversary. So he'll be actually back in the office tomorrow after being out for about a week. So again, feel free to reach out to me and I'm happy to help you out if I can in any way.
Okay. I think we lost Don there. So we'll see if we can answer these questions without him. There he is. He's back.
He's back.
Yeah. All right. Coming in here. Welcome back, Don. We lost you for a minute.
Hey guys, I got dropped off. I wasn't running from the question.
All right. Well, let's give you the next question then. I don't know. Maybe this one's better for Rich, but can we reallocate any of our investment at a later time, say from the lending fund to the housing fund? Maybe I ought to answer that question. I just reallocated some money from the housing fund to the lending or from the lending fund to the housing fund. I basically moved my lending fund investment into my 401k and took the money that was in my taxable account in the lending fund and moved it into the housing fund. So absolutely, you can do that. Do you want to give any more details on that, Don or Rich?
Yes. So the easier of the trades is moving from lending to housing, right? Because you're going from a 90-day redemption window into a fund that has an annual redemption. So we do allow for you to move from the housing fund into the lending fund, but it's only during that redemption window, which typically is a 45-day period starting mid-March to April. So again, you do have the option of redeeming in whole or in part every year in the housing fund. And as part of that, you could do what we call an R&R or redemption and reinvestment into any of the other DLP funds.
Okay.
And Rich, sorry.
Go ahead, Don.
I was going to add just a quick note. I mean, that's a good lead into the prosperity membership we talked about. So one of the things, we realize, we're not a fiduciary, we're a fund manager and, we're not a financial advisor or whatnot, but we realize that a lot of investors, to your point earlier, Jim, of, hey, your qualified accounts make great sense to go into lending funds and your unqualified accounts make great sense to go in the housing fund. We find that a lot of investors don't think about that when they make their investments enough. We try to educate them on it, or they're not thinking about how they're holding their assets in trust or in LLCs or things like that. So these are the type of things we want to help. We go through in the prosperity, helping people allocate their assets in the right structures to maximize tax, to protect themselves from income taxes, estate taxes, from liability. That's a big part of what we try to focus on. So we always try to accommodate helping people get the right capital into the right accounts or to achieve whatever their goals are.
That's a good segue into the next question, which I believe is a question about the November event. Ask it again if it's not about the November event, if it's about the September event, but I think you're asking about the November Prosperity event. What if we can only attend the event on Saturday and Sunday? Can we still sign up?
Yes.
All right, there you go. That's an easy one. All right, here's our next question. Does being a WCI member have any special rates or minimums on the DLP funds?
Yes. So in short, most of our current status is minimum investment for any fund is $250,000, and White Coat gets to get in at $100,000. So we have always and will continue to have significantly lower minimums for White Coat investors as another perk for coming aboard and giving us a chance.
What I typically find, though, is that people come in at the minimum, whatever it is, to kind of dip their toe in, test the water, and then a few months later or a year or two later, now they're happy and they put a bunch more money in. Or if they buy a second fund, it's a lot bigger investment than the first one. And so it's nice being able to get in at a lower minimum. And I think in the long run, most people probably get to where the other investors are anyway. All right, here's another question. Do we have to file in multiple states if investing in the new equity fund, or does the fund only invest in Florida?
And I missed a little bit of the question, but the new equity fund will invest in a number of different markets. We certainly focused on the Sun Belt is our main area of focus. Today, we own apartment communities in 22 states, but predominantly in the Sun Belt region. So our focus is to build in Florida, Georgia, Carolinas, markets that we think are the strongest ahead, and also where we have we like Texas, we like a number of markets that we think have really good outlooks that we'll certainly invest in.
I think the main part of the question was, are they going to have to file tax returns in multiple states because they've invested in?
Sorry, I couldn't hear that part of the question. No.
And that's because of the REIT structure, correct?
Yes.
All right. Okay. All right. The last question I've got here, and if you have more questions, type them in here because we're going to be done soon if we don't get more questions. But our last one here is, can we do a 1031 exchange on the equity fund? And they're not very specific. They're not asking if they can exchange into it or exchange out of it or both. So maybe if you can answer both of those questions, that'll be helpful to them.
Yeah, and it's a topic we spend a lot of time on, and we wish it was an easier topic. So I'm going to first cover the good news, which wasn't the exact question, which is within the fund, we do 1031 exchanges. So as we sell the assets that the fund owns, we're able to do 1031 exchanges, which is unique because we're able to not only capitalize and realize the actual gains of selling the real estate, and investors will realize those gains in the value of their investment, but we completely defer the tax through a 1031. So it's a really unique, incredible structure that allows you as an investor to decide when you want to have a taxable event. And unlike normally where the question comes from, when you sell a property, you have to go find another property and do the whole work. It's a lot of work. You don't have to do that. In the fund, we do all that work. It all stays within the fund. You get all the benefit without having to deal with any of that work. But in terms of if you already own a property that you want to sell and maybe put the money into the fund or sell your investment from the fund and go into a property, kind of either direction, the short answer is no. We are working. There are some very complicated ways you can do it that we're working to find a more simple solution. But in short, right now, you can't sell a property and move it into the fund or the other way around. But once the money's in the fund, we do 1031 exchanges within the fund.
Okay, I think we've run out of questions here from the audience. Oh, here's a new one. Please discuss the new acquisitions announced today. Can you tell us a little bit about that property? I know offline you talked a little bit to me about it. I think it was a 2,000 door property, as I recall. But tell us about your successes this week.
Yeah, there's a bunch of press on it right now that was being blasted all over the place today. So if you type in Google, DLP Capital Partners or DLP Capital Acquisitions, you'll see a bunch of news articles. But we closed on it's a 21 apartment community over 21 community portfolio across 6 states, 4,000 plus apartments. Last week, we closed on 13 out of the 21 communities. We're closing on the other 8 over the next few weeks. So it's a total acquisition of $550 million. It's our biggest portfolio to date. It puts the housing fund now well over 10,000 units owned. Once we finish closing this portfolio, we'll be over 12,000 units owned, well over $1 billion in assets. So it's pretty exciting. Great portfolio, producing phenomenal cash flow on day one.
Okay, I think that's our last one. Do you have any other comments, Leaf? You want to tell us a little bit more about the event you went to? I'm kind of interested in hearing more. I'm not going to be able to make November. I know I'm going to be in Spain, so maybe in March when they talk a little bit more about legacy events, where a lot of my focus is these days, I'll be able to make it. Hopefully, it doesn't overlap with my skiing trip in Canada, but we'll see. Tell us a little bit more about what you were thinking you were going to get out of that, and then the additional things you got out of it that you didn't know you were going to learn. Okay, I got you unmuted now.
Okay, thank you. Yeah, I didn't have the option to unmute myself there. Yeah, I didn't know exactly what to expect. In the physician world, I don't think personal development is much of a focus. We focus on our patients and everyone but ourselves. And so, a lot of the work that we did and the types of speakers we had spoke more to personal development and finding what you want for your own future and building that. And so that was something that's somewhat foreign to me, but I found it very refreshing, and it got me started thinking about a lot of things that I don't spend a lot of time on, like what do I want in 10 years or 20 years? I figured out what I wanted by 45, which was to be retired from medicine and chilling and whatever else, but traveling to Spain like we did, but and have fun on your trip, Jim. But no, now I guess I'm thinking more bigger picture, thinking a little more about, long term, what we want for our kids, how much economic outpatient care is appropriate, if any, raising them well without spoiling them. The event in Nashville was focused more on family. We are going to bring our kids to the next event in November, and I think they're a bit young to get much out of the sessions. I think in a few years, when they're teenagers, that they might actually benefit from sitting in on some of these talks and starting to absorb some of these ideas. So I'm very much excited to go. I don't know if I'll make the March one. We might be in Japan. That's definitely COVID pending, but no, I'm happy to be part of the membership, and pretty excited about it. And it did certainly exceed my expectations, and I still have a lot of work to do. I know Rich will probably be beyond me to start putting more pen to paper on that family compass and some of the other items that we workshopped, but didn't have quite enough time to complete. So yeah, we'll try to work on that before we see you all in November.
One other thing I wanted to talk about on this call, Don's not one to really toot his own horn, but I had an opportunity to get to know Don a little bit better in the last couple of weeks. I've spent most of the last couple of weeks at Lake Powell exploring canyons and sitting on the beach, and had an opportunity to read Don's book called Building an Elite Organization, which is really a blueprint to scaling a high-profit business, which is obviously something that we're trying to do here at the White Coat Investor and having our own struggles with. And so it was really a good opportunity to read his book and see how he built this big empire that is DLP Capital and the associated companies. And there's a lot of lessons there, but what you learn while learning the lessons is you learn a lot about the man who is teaching the lessons. And so he's really kind of a guy who came from nothing and has built an incredible empire and wants nothing more than to help you do the same in your life. And so I appreciate the book, Don. I appreciate you coming out to the conference, as well as your sponsorship of White Coat Investor and Physician on Fire. But I think we're getting to the end of our hour here, and it's probably time to move on. Let me make sure there's no other questions from people. Looks like we've answered all the questions we've gotten during the live session. If you are interested in learning more about the investments available through DLP, you can do so at whitecoatinvestor.com/DLP. And one of the great benefits of doing that is you get to go to these prosperity events that Lee's been talking about. So thanks everybody for your time tonight.
My dad, your host, Dr. Dolly, is a practicing emergency physician, blogger, author, and podcaster. He is not a licensed accountant, attorney, or financial advisor, so this podcast is for your entertainment and information only and should not be considered official, personalized financial advice.